Welcome to another episode of the CattleUSA Daily Podcast. Today we are welcoming back Dan Gerhold with the CattleUSA Insurance team, where we are talking all things commodities markets, what is happening or maybe not happening right now in the markets as far as trading and everything like that goes right now. Dan breaks all of that down for us today, kind of what is happening or what is not happening. And then we actually dive into a little bit of an educational topic today to talk about a few different things in the markets, what they all mean, and breaking all of that down. So let's go ahead and dive into today's episode with Dan. But before we do, if you guys could take a second to like, subscribe, rate, and review this podcast, we really appreciate it here at the team. It helps us continue to grow, reach more people, and make a bigger impact within the cattle industry. And if you enjoyed today's episode and think that it would be beneficial to another producer or someone else that you know, share it with a friend. We appreciate that as always as well. So thank you guys so much for all of the support that you have continued to give us over the past, oh my gosh, almost 7 months now that we've been doing this podcast. I really appreciate it, and everyone at the team does as well. So thank you guys for taking a few seconds to go do those things, and let's go ahead and dive into this podcast episode with Dan. Dan, welcome back to the podcast. How is life in Iowa treating you this week?
It's wet, but it finally cooled down this morning, so we're going to take it as a win.
Yes.
It was pretty nasty last week, or this weekend. The 9% humidity every morning and 90 degrees.
Oh, yeah. It was very similar in Northeast Kansas, where I spent my weekend cleaning out my grandmother's house to prep for her estate sale in the heat with no AC.
Gross.
I was ready to find the nearest cliff, I'm not going to lie, and go skydiving. It was awful. It was really, really, really bad, but we survived, so I'm grateful for this cool snap. Most summers, I'm not typically a person that's I'm ready, to be done with the heat. I typically am I'm ready for fall, but I'm not ready for winter. I don't like being cold. I would rather be warm, but this summer, I'm done. I'm done, and I don't even work outside. I work inside in my cushy little air-conditioned office, and
Yep.
I am done.
I hear you. I think everybody's a little frustrated with all this moisture, and how wrong is it for us to be frustrated with rain in August? It's just so not normal.
Not in the slightest. Not in the slightest. I wish that we could bank it and be like, okay, we don't need it right now, but we're going to need it in a few months. Can you come back then? And in the meantime, send it to somewhere that does need it. I know we still have places dealing with drought, so just send it there and come back around in a few months.
Yep. Yeah. Not too picky. Just weather.
Jeez. Yeah. Well, what's happening in the markets, or rather what's not happening in the markets, Dan?
Well, it's been a whipsaw, but at the same time, it's basically gone nowhere. So nothing's happened. There's been, $6 to $8 moves in livestock, in cattle. Grains have made a rally and then sold back off, and it's just a lot of sideways patterns, a lot of sideways trading. It's a wait and see game. Just a boring month of August. So, there's just not a lot to talk about right now. Waiting this week on cattle on feed report, waiting on cash to develop, which probably won't happen until Friday. I might get started today, but not in a big way. Just a lot of whipsaw for no reason and really going nowhere. So not plain and simple, not a lot to talk about, Lauren.
Yeah. There really isn't. There really isn't, unfortunately. Dan, is that typically the case for this time of year, though? We're kind of rounding out the dog days of summer. This is a little bit to be expected, right?
Yeah. I mean, honestly, yes. Everybody's waiting on, a reason to buy grains, pull it off this, hopefully what it could be a summer low. Everybody's waiting to see our cattle going to get up and going, once we past this Labor Day weekend coming up in a couple weeks. A lot of wait and see games. Traders just not overly confident with anything right now on the buy or sell side. Yeah, it's back to school season. Meats, products, everything just kind of goes into summer hibernation, if that makes any sense, and waits for news to happen. The old rule of thumb is late August, September, October. It's not normally friendly to equities either. So it's hard to get wildly bullish cattle here, even with what appears to be a bullish cattle on feed report coming. Hard to get bullish, when cash has been pretty stagnant the last 2 to 3 weeks. It's hard to get bullish when it seems like, we run the thing up, set some new highs, take $6-8 off of it, run it back up, test those highs, take $6-8 off of it. Yeah, feeder cattle are making new all-time highs yesterday, the day before, but at the same time, that's been a whipsaw too. You're coming into August expiration, that has to settle up to that index. The index is whipping back and forth, pretty violently just because of the low volume of feeder cattle that are selling. So, your sale barn cattle are running extremely high. Some of your direct cattle are quite a bit cheaper. So that thing is bouncing back and forth pretty hard. But like I said, in the end, it's not going anywhere. So it just makes for a boring market.
Mm-hmm.
I guess we should be thankful it's not a great big bear market.
Yes, take what we can and find the joy in the little things as far as this goes. Dan, I want to dive into kind of another topic. So, little change of events for us. We're not going to spend the entire time talking about the market because frankly there's nothing to talk about in the market. Let's dive into our topic that we wanted to kind of talk about today. If you would like to introduce that and kind of start to share some of your just thoughts on it as well.
You bet, yeah. So what we kind of mentioned, explaining or doing a little education piece on was open interest. We look at traders, the way they trade in the market. You look at managed monies, hedgers, commercials. All of these are a factor when it comes to futures and options trading. So, you look at a market that's going sideways or going nowhere. It's not a big thing to discuss right now, but eventually we're going to stop going sideways and we're going to go violently up or violently lower, very likely. Sideways patterns don't last forever. So if we watch the open interest report, we can get a rough idea of what traders are doing. So let's say the market decides to break out to the upside. If that happens and open interest is going up, that means we have new strong buyers coming into the live cattle market. That's a bullish thing to see. You want to see new, fresh buyers taking the long side. That means they feel like this thing is worth the risk and it's got more upside potential. If the market is going up on lower open interest, that's typically a sign of your hedgers blowing out of short positions. They're throwing in the towel. They're tired of the margin calls. So that's not a strong market. Sometimes that can be called a dead cat bounce. You look at the feeder cattle market 2 weeks ago, I believe, open interest was dropping in a higher market. So we were very, very concerned that, are we putting a high in here? Inevitably, it came back to as the cash feeders in the sale barns didn't soften, so the market didn't fall apart. Had cash feeders softened a little bit, in a normal year, we would have seen more numbers. In the last 2 weeks, it probably would have taken a big chunk out of the feeder cattle futures market because we plain and simple ran out of new longs or new buyers. So that's a big thing we watch, is that open interest. Coming back, talking about managed money, they've been relatively, let's just say, ho-hum lately. They're not adding a lot of longs. They're not exiting a lot of longs. For the most part, managed money trades the long side of live cattle. They use it as an inflationary hedge. They're also using it, to play with the stock market. So they trade on the long side for the most part. Every now and then, let's say 2-3 times in a decade, they'll get on the short side, but not by very many contracts. So they've been relatively steady on their trading and just holding their positions. I hope we don't give them a reason to exit because that's 130,000 contracts, net long that they could cause some serious damage to this market. But if they decide to go to a new record, that'd probably push you up closer to 160,000. I'd love to see that if we give them a reason. That reason up at these price points is going to take higher cash. New all-time records, I'd say we somewhere close to that 250 cash. And then, you're also going to have to give them fundamental reasons. That's up front. You're going to have to give them fundamental reasons to stay and continue to roll that into the back. Like they think this market's going to last longer. Another big concern, we're talking about that we've watched in the last, I'd say 3 weeks is spreads. So when we talk about spreads, we're comparing August to October, August to December. We're comparing October to December, October to February, so on and so forth. in the last 2 to 3 weeks, we've seen the back months leading the front higher. So what I mean by that is your August and your October has been relatively flat. Cash hasn't moved in the last 3 weeks, so nobody wants to be aggressive buying the front. But with cattle on feed this week, they've been buying the back because we're expecting lower placements. So they've been buying that February, they've been buying the April, a little bit into December, and we've been watching on up days. You'll see the back up $1.50 to $2, and you'll see the front up 50 cents. That is something that is very concerning from the standpoint of traders want a bull market to be led by the front. So we need fat cattle right now. We don't need them in February. Is demand strong? Is supply short? That should be led by the front right here, right now. When the back is leading the front instead of vice versa, that's concerning. That means they're worried about finding cattle later, not now. There's plenty. A lot of times that can signal a potential trend change coming down the road. If you look at the corn market just a couple of years ago when we were sitting up at $6, $7, $8, that did the exact same thing. All of a sudden, all the buying went to the back. All the long positions up front inevitably were, guys took their profit, exited those, and they did not roll them on and continue that bull market. So then all of a sudden we build a carry in the market. They get out of their longs in the front. The market falls. It just continues to ratchet lower. Not a great sign. So that's very concerning. Another, I'd say, concerning thing is watching, the basis. For the last 2 years, cash to futures live cattle basis, it's been extremely strong. I think it's been positive. If not 24 months, it's knocking on 20. Normally, there's a period in there where that basis narrows to cash or futures narrow to cash, and then all of a sudden, sometimes you see futures go over cash. We haven't seen that in close to 2 years. So now all of a sudden you've got that basis changing back to a little bit more normal instead of, +5, +10, depending on your area. Now all of a sudden, hey, we're only +3 to +5. Okay, that's a little bit scary to me as well. I don't like to see that basis change. Like I said, managed money, to get them long, you have to have strong cash market to entice new buyers at record high levels. So that's a little bit concerning. And then the final piece that, I would say is concerning in the last 2-3 weeks comes back to just the plain cash market. It's been relatively flat. It seems like we had opportunities, for the last 2-3 weeks to push them higher. And all of a sudden one day comes in, futures get wrecked $6 to $8, and the Packers are able to squeak through with steady cash for the week. So it's very concerning to see that trend, that pattern change to a flat cash market instead of a big bull market, especially when we have that leverage. Part of that is because of the kill cuts we've had here in the month of August. They have not been aggressively slaughtering cattle. That, you might claim that that's because the numbers weren't there. You might claim that's because they were trying to prop boxes up and improve their margin. Inevitably, it comes down to is cash has been mostly flat. Going forward, we get past this week's cattle on feed, and past next week, you get past Labor Day. Now all of a sudden it comes back. Let's see what the consumer can handle. I know last time we talked, we mentioned the retailer had the ball, had the control. Now all of a sudden that flipped again. They priced themselves too high. The consumer kicked back. Then all of a sudden the retailer had to move that meat. They want to stay fresh at the store, so they had to drop their prices. In comes the consumer, starts buying again, cleans up that product, and then all of a sudden the Packers had a lower kill, lower beef offerings to the retailer, and now all of a sudden, hey, boxes go on a rip again. So it's been encouraging to see the last week's rally in the meat market, but at the same time, I'm very, very hesitant. This time of year, you get past Labor Day buying, you get back to school. Pennies can be pinched by the consumer, as they're buying school supplies and all that. Are they going to come back to that meat counter? Are they going to buy more, once we get past that holiday? So there's a lot of stuff that's concerning here. Overall, do I think it's going to entirely wreck our cattle market? No. It's just stuff that, hey, this could possibly be an indicator of a trend change. Now we'll see how we act in the next 2 to 3 weeks.
Yeah. It's one of those situations, again, I wish we had a crystal ball that we could sit here and be like, hey, this indicator is correct and this is going to happen, or this is what our fall is going to look like. But unfortunately, we don't. So it's looking at these indicators and trying to stay optimistic while at the same time trying to be realistic and prepare ourselves for a trend change, a market shift, anything else that might come, consumer demand shift, whatever it may be. The million things on the list that adjust and change the cattle market, and the commodities and everything else that can come flying at us at any point in time, and trying to shield ourselves in any way that we possibly can. So any other thoughts or closing remarks on that, Dan?
Common comment I'm hearing is the fact LRPs are so expensive. And maybe we've touched on this before, Lauren, but the fact is you guys, the producer's covering so many more dollars.
Mm-hmm.
So, there's a rate of change there. You're going to see that price of LRP premium go up as the coverage that they offer goes up as well. So that's part of it. The other big part LRPs are going up in price is that volatility we've seen in the market the last 3 weeks. It's gone through the roof. When you're moving $6-8 a day, options are going to get stupid expensive. Since your LRPs are somewhat based on those put options, we've got to keep that in mind. It's still cheap compared to a put option. It's still a good tool to use, especially at these levels and everything we've just talked about. But at the end of the day, I can't do anything about the cost of LRP. It's probably where it belongs given the circumstance.
Yeah, absolutely. Anything else as we round out the podcast today, Dan?
Buckle up. Good luck.
We need to put in an audio right now of like the thing that plays over the loudspeakers whenever you're getting ready to go on a roller coaster, of like pull your whatever that is. You know what I'm talking about though. Like the thing that goes over the loudspeakers is pretty much telling you to like buckle up, hold on, all of your arms and legs in the vehicle at all times. Like
absolutely. Yeah, the sideways pattern I would anticipate is probably going to not last much longer than this week. I think inevitably, my gut says we're going to break out higher or lower starting next week. And at this point, I'd love to be really, really bullish and say definitively it's going to go higher, but I can't. It's honestly, it could go either way at this point with what I'm seeing.
Yeah. Definitely can. Well, Dan, as always, thank you so much for your time, knowledge, all of the things. I enjoyed today's little educational segment as someone who knows what the heck they're kind of talking about, but doesn't really know what the heck they're kind of talking about sometimes. I appreciated the little educational segment, so I feel more knowledgeable on the topic, and I know our listeners appreciate it as well. To all of you listeners out there, thanks for tuning in, and we will see you all tomorrow on another episode. Have a good one, y'all, and if you are looking at LRPs or anything like that, interested in some insurance quotes, we've got that exclusive link for you guys down below for our CattleUSA Insurance, where we work with Dan and his team to be able to provide that for you guys. Dan and his team and everyone else on the CattleUSA Insurance team are there to answer questions if you guys have any. So head on down to that show notes link and they'll be able to help you out there. We'll see y'all on another episode next time. Have a good one, y'all.